Okay, so the market lifted by 0.5% today, but still below 21,000 points. It's still very much a bear market in my view. Explain to us what's going on and what's needed to lift it and whether this trend is going to continue.
I mean, you're absolutely right, Lerato. The market, the bears are still, very prevalent in the market. Even though the market rallied by 58 basis points today, overall it's still down on a year-to-date basis by close to 19%. And really, the negative performance has been driven by the abysmal performance of the banking sector as a result of the banking sector reforms being undertaken by the CBN. So I think until we see a closure to that, the market is still going to continue to be bearish as well. And in addition to that, we've seen the resurgence of the Eurozone crisis, which has been led by Greece as well. So I think, those two factors are mainly what is responsible for the bearish performance of the market.
Well, those banks, we should be getting some clarity and closure soon because the deadline is effectively today, the 30th of September. We've seen extraordinary general meetings amongst shareholders of rescued banks. Just tell us where we're at in terms of the recapitalization and the kind of deals we're going to see.
I mean, a number of banks have, as you mentioned, successfully approved the M&A transactions at their EGMs. Access Bank is partnering with Intercontinental. ETI is acquiring Oceanic Bank. Sterling Bank is also taking over ETB. And I believe Union Bank is on course to raise the financing from the strategic investors. So I think the rescued banks are on course to meet the 30th September deadline, but I think it will still take some time to see the full benefits of the M&A transactions. I think integration issues have to be resolved, which historically can take anywhere between 3 to 5 years. I think we have to see how the M&A actually impacts the bottom line of these banks before the market starts to respond positively.
And of course, a lot of this has been predicated on non-performing loans being mopped up by AMCON. AMCON, I know, has taken over 3 other banks. Just explain to us their role, because when AMCON was formed as an asset management company, the idea was to really reinvigorate the banking sector, the markets, and inject liquidity. Will that have a direct impact?
I mean, AMCON has been pretty aggressive. From the inception of AMCON around about a year or so ago to now, they've issued over 2 trillion in bonds through both shelf registration and actually the issuance of those bonds. And, that's a very aggressive number considering that the total debt pile of the federal government is just around 2 trillion as well. So, AMCON has been pretty aggressive, but I think that the plan is to try to very aggressively resolve the banking sector crisis. But I think AMCON is on course. What they've done more recently is to issue just under 700 billion naira in bonds to try to zero-rise the rescued banks that have found partners. So we think that AMCON's role is very important and very strategic.
All right, we've also had good news coming through from the MPC in the last week, raising interest rates to 9.25%. Unfortunately, it hasn't really helped the Naira in terms of the support that it's needed. Has it helped the markets? Will it help the markets?
I mean, well, that's CBN's one of CBN's key objectives, to try to use the movement, northward movements of interest rates to help stabilize the exchange rate. But I think the pressure on CBN is still intense. We saw today that the 63-day OMO went up aggressively by around 100 basis points to close at 12%. I think part of what CBN would like to see is more foreign investors bringing in money to participate in this domestic fixed income instruments, which should help stabilize the Naira. But I think the challenge is always going to continue. We're a monoproduct economy. I think once we start to diversify away from oil, I think it would be a better long-term measure to stabilizing the exchange rate over time.
Very briefly, Shuaib, dividend yields in the equity market looking a lot better, much higher than we've seen. Investors still not buying. So what's it going to take for them to get back?
That's a very interesting question. We've seen dividend yields at multi-year highs. unfortunately, confidence has also been at multi-year lows. So in the banking sector, we've seen dividend yields northwards of 10%. You know, those are very attractive rates when you look at that relative to fixed income rates in, you know, whether it's the money market or the bond market. But I think that we have to wait to see confidence return gradually into the market, whether it's from the global perspective or from the local perspective. Once investors start to see a clearer policy direction from the federal government, that should help achieve this objective.